Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, November 18th, 2019. Mostly a flat day across the board today for the most part, so there's not a lot of new or very important technical developments to note. A couple things we'll note here, really what I call in the micro levels, the 60-minute chart of NQ. There's something to point out there, and so we will keep this one very brief. This should be under 10 minutes, this video, if not considerably less. Alright, so what I've been watching lately are these trend lines on the indexes. SPY, we broke down last week, and we've been back testing, simply extending the divergence, negative divergence that's been building on the daily chart. So each of the previous divergences, both followed by a correction, and this just really being one big extension. But so we have breakdowns, but back testing so far. We have not had any impulsive selling, and most importantly, there's still some levels that need to be taken out below that I've said to really open the door for a deeper downside. QQQ, same story, breakdown, back test today. Same story. So no technical change, nor could you have much when the market's flat. Oh, by the way, so talking about flat, we were flat on the markets. Risk on assets, meaning stocks. The S&P or SPY was up 0.07%, which is flat. QQQ up 0.08, which again is flat essentially. IWM down a quarter point. Per IWM, that's really nothing. MDY down red by 0.17%. However, the risk on assets were up, and I highlighted those last week is looking, like objective longs, if nothing else, hedges. And the reasoning for that was, well, multiple reasons. I did quite a few videos and updates, but TLT fell here to this intersecting trendline support. So the takeaway from this is that we continue to have the risk on assets rally today. Not by much, but so far it's a very near-term trend. We're seeing as a stock market, although it's refusing to go down, we've seen a fairly persistent bid into the risk on assets recently starting to rise. TLT again up today, the 10-year, that's the 20 to 30-year Treasury bond ETF. Gold up again today, another 0.3%. Again, not much, but you're seeing money starting to flow into those risk-off assets, so something worth monitoring. And silver, I mentioned to members on Friday, still looking near-term bullish and leaning towards some upside in the precious metals. Not hard buy signals or anything there, but just some attractive risk rewards, if nothing else, for a bounce trade. And I said silver is likely to outperform, and it did today. It was up almost 0.5% versus gold's 0.3% hike. And so we'll look at a couple things here before we get to the 60-minute charts. I want to just cover again the main sector ETFs. I started highlighting this last week. We have XLK, and remember, until and unless tech gives you a sell signal breakdown, the market's not going anywhere. Tech is the market, and tech is still above its uptrend line. I'm referring to the daily uptrend lines off the October 3rd lows. XLV still comfortably above, down today, but again, we had a big green candle on Friday, and so these are the levels I'm watching. So not just, we're back testing the trend lines on the indexes, but these are the leading sectors. XLK is the largest in the S&P 500. XLV is the second largest, and then XLF is the third largest in the S&P 500. You don't have any financials in QQQ. That's mostly tech stocks, but this is certainly one to watch, and you can see there it is. So what I'm on watch for, and again, given this trend is resilient, I've heard it now from quite a few people, and I maintain what I've said. We do not have any sell signals. Divergences are not a sell signal. Overbought conditions, over extreme bullishness, those are not sell signals. A sell signal comes on a technical breakdown. It can come in many forms. It can come on a break of these trend lines, and not just one. Like I said, not just the index breaking down last week, the major indexes, because when they broke down, there was absolutely no follow through. There was no impulsive selling, and most importantly, there were some minor levels, what I think are a little more important, that had yet to be taken out, such as 199.80 on QQQ, and the big level I've been watching on NQ for quite a while, 8,200. So I have it color coded here. All right, so now let's just talk micro levels, things to watch tomorrow going forward. Because we're seeing the momentum is certainly waning here. We're moving up, but again, as I just showed you, it was a virtual flat day. Overall, if you take the losses on the small caps, we were actually down, but again, the large caps control where the market goes, so we're watching those. So let's just loop back to this morning's charts I'm watching today. So I said this was posted before the market opened, screenshotted a little over an hour before the market opened for trading today. NASDAQ NQ, NASDAQ 100 futures continue to backtest the 60-minute uptrend line following last week's breakdown, with a break below this small minor wedge, minor trend line likely to spark a sell-off, which could have a cascading effect if and as each of the subsequent support levels below are broken. So that's the operative word. A couple things, but that whole statement, but this if and as each of these levels below breaks. And so the arrow breaks show you where those key levels are. So we're going to look at that chart and then loop back to the one we were just at, the live chart. So this was this morning's chart. There's the wedge. There's a couple things that stand out here. The most important things on this chart are the primary uptrend line right here, same one we've been watching on QQQ on the daily charts that I start out with. That comes off the October 3rd lows. We broke down, but again, a couple things happened when we broke down, or I should say more importantly, did not happen. Number one, impulsive selling. That most certainly didn't happen. It's the exact opposite of impulsive selling. We just kind of continued to drift sideways. And then, for now, several weeks now, I've been saying 8,200. That's a level I think will do the trick when we get it, meaning we'll get, see volatility expand. You'll see more than a 0.5% move. I've talked about that recently, other than I think maybe Friday. Up until last Thursday, we had in over a year the longest period of consecutive days where the S&P 500 moved up or down less than 0.5% per day. I forget whatever the number I told you last week. Friday we expanded that a little bit, but not much. So we're still in a very low volatility range. VIX is at a low, and so this is what I was referring to. So now we did get that breakdown, and you could see the arrow break. So I had the first support here, that level. Here we'll zoom in so you can see on the YouTube channel. Zoom in. That was at 82.81. There is no 82.80.95. This is just this charting platform. It doesn't auto snap. NQ trades in quarter point increments, so you can either be at 82.81 or 82.75. So that's 80, whatever. We'll call it 82.80. So splitting hairs, anyways. It's a 8,000 point index. So that was then, and again back to what happened today. So this morning after the open, that was posted at 8:20, screenshotted. We broke down, and as technical analysis often does, when you broke down, it wasn't just, we didn't limp through there. It looked like the real deal. Now when we broke down, I suspected, and I even posted, I figured if any bounce off here would be minor and fleeting. It was a little bit more of a bounce than I expected. I expected very little reaction, maybe a little, I expected a reaction. That's why, of course, I had the arrow breaks, remember, on the chart I just showed you. However, we bounced a little bit more, but not that much. And again, as I just showed you, the Qs closed flat today. So basically, it just saved us from a red close with that reversal. And we closed, you can see, right back to the breakdown point. There's where we broke down, where that arrow is. We closed a little bit below that on the NASDAQ futures. And so, like I showed you on the chart this morning, on the charts I'm watching, was right here. You get these arrow breaks. That's where I expect a reaction, and we got one, a little bit more than I wanted. But now I'm watching that level, because what I'd said before, if and as each of these levels go, we should have a cascading effect. So this is what I'm watching for tomorrow, 8,200. I'm sorry, 82.80. So if and when 82.80 goes, then that should bring us down to the 8,200 level. And that was, to me, the more important level. So, and by cascading effect, I believe the selling will accelerate. So if you get to 8,200, I would expect a reaction on the initial tag. But whether we have a reaction, meaning a bounce, or not, then you need to break 8,200, and that opens the door. And at that point, I think the odds are pretty good that we'll go on and hit those minimum swing targets I'm looking at, 80 pullback targets, 80.40 to about 80.50 or so there. That's those lines. It's a support zone, and quite likely, is the way I'm leaning now, about 79.78. But again, no sell signals, no trade. So we broke that minor trend line there. Really wasn't a lot of meat on the bone to get a short trade, because again, how are you going to, you're talking, the market was almost flat today. But again, it's the technicals are working now. We just have to watch that. That's palladium. That was another. And again, in this morning's charts I'm watching, it's like I said to members, and I did in the follow-up video earlier today. This looks like the first wave up, and that's where we were this morning before the market opened. You can see here 822 screenshotted. And that looks like you broke out of the trend line, and this is gold. Gold is a risk-off asset. These are gold futures. It's a constructive chart, and so sometimes you can glean predictive value on the stock market. If you see bullish setups on Treasury bond gold, that indicates they're likely to rally, and if they rally, it's going to most likely coincide with a pullback. So far so good. We wave one up, and what I said in the video today, you should get at least an ABC corrective wave. I mean, the near-term trend, the intermediate trend in gold has clearly been bearish, but bigger picture, and the reason I focused on gold, silver, treasuries last week, a lot of them had fallen to key support levels, which they have defended on the long-term weekly charts, and they're still in primary bull trends. And so, nothing else, they're at least bounce trades, and we're seeing that money come in. I don't want to make too much of this yet, because a few days or a couple weeks doesn't quite make a trend. It makes a very short-term trend. But again, that was this morning, having another thrust, and so far, again, this is just micro analysis, because there weren't any big moves in the market today, but so far I'm seeing what I've been seeing for the last couple weeks. This is how we closed the day in gold. So we did, it was posted this morning right here, and we did get that lift. And I think if we can continue on, I do think that's the case. We'll continue on this week, more upside in gold. And but the big thing is, whether gold, silver, all those take off or not, where is it right here? There it is, NQ, 8280. We need to break today's lows. Let's just say today's lows. Need to break that. Otherwise, the trend remains bullish. One other thing I mentioned is that we back tested. We broke down from this trend line here on the 60-minute chart of the futures, as well as the indexes. That trend line off the October 3rd low. We broke down, had an initial back test, second back test, and a third. This back test is getting long in the tooth. You can back test for a while and roll over, but this, just eyeballing the pattern, the scope of this move, the divergences, everything else, I think if it's going to play out, it needs to soon. All I can say right now is the buyer stepped in at the very first shallowest support level, first pullback target I had today. They stepped in, and we have to leave it at that right now. So that just means they bought the earliest dip. I wouldn't call that aggressive buying, but they did buy it. So bulls want to see that hold. And if that happens, if we happen to go up tomorrow and continue up this week, I'm going to say there's a very strong demand in this market, even though volume's low. There's just no sellers. We know that right now. But if they fail and they break this down, then watch 8,200, and then each of these levels, like I said, 8,200 breaks, it increases the odds of these levels being hit. And I also think you'll start to see, instead of a quarter point up or down day, you'll probably see the first 1% plus down day in a while. I think when 8,200 goes between here and here, that's where you'll probably get a relatively swift move down, wiping out weeks of gains right there if and when it happens. And that's it. Let's keep it short and sweet. Like I said, not a whole lot more to point out other than these kind of micro levels right now, because we're trading at or near all-time highs, so there's nothing really to look at above. And the trend is bullish until we get some sell signals, and that would be, like I said, break of these minor levels, start to get some impulsive selling. Once you back test, you want to see impulsive selling off the back test. We didn't get that either of these two previous times that we had back tested that wedge. That color's not standing out there, you can see right here. And so we back tested here. If we can roll over, break support, and then we should go. Otherwise, this is it. And unless anything changes, that's the broad market, and I'll continue to focus my efforts elsewhere on things that have more favorable risk return potential and much higher gain potential than the this market inching up 0.25% a day, whatever it's doing. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.